Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do one question where various ratios are asked and level of question is bit typical. Let us go through the question. From the following information, prepare vertical financial statement and calculate return on capital employed, debtors turnover ratio in times, stock working capital ratio, current ratio, proprietary ratio on the basis of total funds. Some of the relevant balances as on 31st March 2014 are given below. Equity share capital will be part of share capital, preference share capital, 8% debentures borrowed fund, debtors current asset, creditors current liability, cash current asset, bills receivable current asset, bank overdraft current liability, reserves and surplus part of shareholders fund, closing stock inventories current asset, provision for taxation current liabilities, proposed dividend current liabilities, other information, sales 10 lakhs, cost of sales 7 lakh 50,000, net profit before tax 1 lakh. Sources of funds, first part of the balance sheet. There we have shareholders fund. In shareholders fund, the first item is share capital. In share capital, we have equity share capital 2 lakhs, preference share capital 1 lakh. Equity plus preference, total share capital 3 lakhs. We have to add reserves and surplus 43,000. So total shareholders fund 3,43,000. To this we will be adding borrowed fund. In borrowed fund we have 8% debentures 1,50,000. So total funds employed 4,93,000. Application of funds, we have fixed assets. By looking at the information given in the question, we find that there is no clear information about fixed assets. Let us consider working capital. In current assets, we have debtors, cash in hand, bills receivable, closing stock. Total current assets 82,500. जरा ते नॉक कर, आवाज इकडे येतोय. In current liabilities, we have creditors 15,000, bank overdraft 8,000, provision for tax 35,000, proposed dividend 10,000. Current asset minus current liabilities, we are getting 14,500 as working capital. Total capital employed is 4,93,000. Therefore, total assets should also be 4,93,000, of which we got working capital 14,500. We don't have figure of fixed asset. So fixed asset is a balancing figure. Four lakh 78,500, that is the amount of fixed assets we got as a balancing figure or missing information after deducting 4 lakh, after deducting from capital employed 4,93,000 the amount of working capital. So we also got now fixed asset 4,78,500. Let us proceed to calculate various ratios. In this question, we got information of sales 10 lakhs, cost of sales minus 7,50,000. We get net profit before tax 1 lakh. As per information given in the question, debentures are 8% debentures. Amount is 1,50,000. So we can calculate interest on debenture. 1,50,000 is a debenture, 8% debenture, so 8% of 1,50,000. It comes to rupees 12,000. Net profit before interest and tax. Net profit before tax plus interest divided by capital employed multiplied by 100. Net profit before tax 1 lakh plus interest 12,000 divided by capital employed. Total capital employed here is 4,93,000. So it is 22.72% return on capital employed. Next we have debtors turnover ratio. Credit sales divided by debtors plus bills receivable. Sales we have here 10 lakhs, which will be presumed to be credit sales. Debtors we have 18,000, bills receivable 12,000. So we get debtors turnover ratio 33.33 times. It was asked in question that it has to be calculated in times. 33.33 times. Stock working capital ratio, closing stock divided by working capital multiplied by 100. Your closing stock we have 32,500. Working capital 14,500. Stock working capital ratio 224.14%. Current ratio Current assets upon current liabilities. Current assets 82,500. Current liabilities 68,000. Current ratio 1.21:1. Next we have proprietary ratio. Proprietary ratio, proprietors fund divided by capital employed, that is total funds multiplied by 100. Proprietors funds 3,43,000, total capital employed 4,93,000. Proprietary ratio is equal to proprietors fund divided by capital employed. Here we are required to take total funds as capital employed multiplied by 100. 3,43,000 proprietors fund divided by capital employed 4,93,000 multiplied by 100. So proprietary ratio here we got 69.57%. We have calculated all necessary ratios. In this question, one thing we are required to note that the amount of fixed assets was not clearly given. Secondly, we were required to consider interest, which was not given clearly. So we have calculated interest on debentures so that we can calculate properly the return on total capital employed. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.